All right, okay. Hello, everybody. My name is Darius Anucauskas. I'm from Easy Markets, and this is Daily Pitch International. Quick take on some special events that are happening today. So, look, we're gonna. This is a separate video to the webinar, which I normally do every morning. So, I decided to do these little separate segments if there is a special event coming out. And today we do have the US CPIs. So, talking about special, look, it's a market moving event. So I'll jump into the charts in a little bit. I'll dig into the numbers. But hey, before we go any further, we need to quickly have a read through our risk disclaimers. So the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm just going to mute myself for a little bit, finish off a few things here and there. In the meantime, yeah, you can finish off reading the risk disclaimer. All right, okay, ladies and gentlemen. So, yes, let's jump into the numbers very quickly. So, first of all, what are we looking at the calendar today? So, of course, yes, the core and the headline inflation numbers from the U.S. Look, in my morning webinar, which you can find on our YouTube channel, I talked about this already, and basically there is an interesting moment right now. So the current expectation for the inflation numbers to come out is for the year-on-year numbers is to come out lower, for the month-on-month numbers to come out higher. Okay, we're going to focus on the year-on-year number. The moment the kind of the shift is, let's say, slightly on the lower side, and yes, it's in the direction of the Federal Reserve inflation target, which is around 2%. Let me just double check myself very quickly. Inflation target, yes, that's around 2%. There we go. And it stays like that. So of course, any move towards the 2% is seen as a good thing for the Fed. They don't need to basically go cutting rates. They can continue supporting the economy. So at this point, let's put it this way: if inflation comes out lower than the forecast, and I'm talking about the core and headline year-on-year numbers, if those come out on the lower side, then basically then we are in line with this idea of seeing some major cuts by the end of this year. So look, we have only three meetings left, and currently the expectation is that we're gonna have four rate cuts by the end of this year. Now, look, this number is actually these projections are actually dropping right now. Before we had five potential cuts. So when the job numbers came out, suddenly the jobs are in a bad position, and the market is selling off. And this is where I said in my previous webinars that look, they had to come out with something. That's why this whole drastic measure of five cuts by the end of this year came out. So it appeared suddenly, and yes, I mean everybody was like talking, oh my god, like in probably in September they're gonna do two cuts, and then November maybe two cuts, and then maybe one cut in December. So at the moment the expectation for September is to see two cuts. Okay, look, I'm not gonna rush into things, but we're getting one CPI reading right now today, and we're gonna get another one before September. So if by any chance the number here continues to slide, continues to go, let's say it comes out lower, the headline year-on-year inflation number comes out lower than the forecast, then in a way, then there we can go for those cuts here. We can see that those two cuts in September potentially. However, if there is some sort of a surprise and we see actually the inflation numbers picking up again, because okay, those have been drifting nicely to the downside since April of this year, and when we were like here at 3.5, and since then we were kind of drifting nicely to the downside. And right now, that's why maybe the Fed is so comfortable with going for those bigger cuts, like in September. Before job numbers, we had only like one cut expected by the end of this year. Now it's suddenly it's like four cuts, and in September we're now expecting two cuts in at least. So, look, I don't want to rush into things, but just be careful. Don't try to predict something. The numbers, like I said, if the number surprises us and comes out higher than the forecast, the same story with the core year-on-year inflation. If it comes out higher than the forecast, then this whole idea of seeing some cuts maybe actually could drop. First of all, I think the September projections could drop. We could now this 54 and a half and 45 and a half could probably shift places. We could probably expect one cut only. So, yep, keep your eyes on that inflation number, of course. It's going to be very interesting to see. Now, what could be the reaction in the market? So, for now, if inflation comes out higher, of course, that could be a bit of a negative for the indices. We could see a bit of a slowdown here because we have been seeing a nice correction after like last week's Monday. We're seeing a nice correction back up. So this correction to the upside moment could kind of slow down a little bit. So, yes, so that's why we need to be very careful. I keep on saying to everybody, don't try to predict the number, wait for the number to come out, and then, allow the market to have its first reaction. Then it stabilizes a little bit. Everybody now and then understands what's happening, and then we understand the direction, and then we go in that direction. So I'm just saying that keep your eyes on the inflation number. If it comes out, let's say somewhere close to the forecast or to the previous number, let's say it comes out as forecasted, right? What could we expect? Well, in a way, I think that this could actually start shifting more towards the one cut only. Why? Because the fact that it's not dropping, it's not going towards the 2%, it's just staying at the same level, that's something that everybody would be worried about. Because like why it's not dropping further, so, and that's where I think that this idea of having two cuts could shift to only having one cut in September. What could happen with the US dollar here very quickly? Basically, the dollar could strengthen just a little bit. I don't think that it would strengthen that much, but it could strengthen a little bit. And yeah, maybe we could see some other assets like gold, just kind of slowing down and not really moving up, or let's say the euro dollar, maybe just kind of slowing down, because at the moment we're seeing that yes, inflation is expected to decline. The market is expecting that yes, we're going to see lower numbers. This could be a bearish indication for the US dollar. More cuts could be on the plate, and yes, that's why we're seeing these instruments like Euro USD. Okay, I'm not talking about, or AUD USD, actually a good example here. That's why we're seeing those pushing a little bit more to the upside. Let's wait and see. Like I said, let's wait for the numbers. If the numbers come out, let's say somewhere close to the forecast, or maybe even let's say the same as previous, that could be seen as a bullish indication for the US dollar, because it could shift this idea of having two cuts towards one cut in September. Again, like I said before, we'll have another CPI reading before September, so that's going to be quite critical. So keep that in mind, ladies and gentlemen. So yes, like I said, that was just a quick take. I wanted to share this information on the US CPIs, because in my opinion, that's a big event coming out today, a market moving event. So yes, look, stay tuned. We'll be releasing more of these short little analysis. They're going to be thrown in on our Easy Markets channel on YouTube. So yes, you can watch the full webinar as well, but also, like I said, these separate recorded videos you can find on our Easy Markets channel as well. So, ladies and gentlemen, I hope you enjoyed it. I hope you found it useful. Let me know in the comments if that was useful or not. So yes, I'll be more than happy to produce more of these short little videos for those special events. Let's say when they're on the calendar. So, but for now, stay safe. Have your stop losses in place. Risk only what you can afford to lose. Don't overtrade, and everything will be fine. I'll see you next time.